Hello, everybody, and welcome to the GoNoGo show for this week. It's November 3rd. The leaves are still falling. It seems like there's no limit to the number of leaves that fall around here, but fall is certainly here. We're getting some nice weather, but I'm sure that's going to cool, as did the markets. You'll notice that I'm on my own today. Tyler is traveling. He's in India for some events with the CMT Association, so it's just me. We're going to walk through the charts. If you're watching on YouTube, great. Subscribe to the StockCharts channel. Also check out GoNoGo Charts YouTube. And also don't forget to look into the StockCharts on-demand app, where you can, of course, take all of this with you. So let's start as we usually do. We'll take a look at the markets from a top-down perspective. And if we pull up our asset map here, we'll get started. So it's been an interesting week. We saw some change in the maps this week. We saw the S&P enter a go trend on Monday, or actually Friday of last week, and that looks to have been short-lived. So you can really see here across the right side of the map that we're struggling. We're struggling to hold on to these go trends that were emerging in equities. You can see the top panel here is the S&P. We can see these three aqua bars that we had Friday, Monday, Tuesday. And of course, all of this was leading up to the Fed announcement. And we'll talk about that a little bit later. But some positive earnings over the last couple of weeks, leading to some strength here. And we're going to look at this in terms of multi-time frame to see what we think in terms of the context of the larger picture. But we can see that this day and yesterday we've reversed and we are back in no-go bars for U.S. domestic equities. Treasury bond prices still in a no-go trend. Remember, prices are move inversely to rates. So rates in a go trend, bond prices in a no-go trend. The commodity market has strengthened a little bit. We're seeing some strength in commodities. We'll look at some charts of the energy sector and some oil companies later. We can see how those are performing well. And the dollar keeps on going. I mean, who didn't think when we saw this amber bar here that perhaps the dollar run was going to struggle? But no, the dollar remains in a go trend, and we'll take a look at that chart as well. So let's start with the S&P. As I said, there's been some big moves this week. We've seen a go trend emerge and then quickly disappear. And we talk at length about relief rallies in bear markets. And if we are going to be careful with our context, we probably want to start looking at a weekly chart to get a sense of the overall market bias. And where are we? We are in a no-go trend. We see a series of lower highs and lower lows. Yes, the last couple of weeks we've seen a weakness. We've painted pink bars instead of the strong no-go. But we are still, the weight of the evidence on the larger time frame tells us we are in a no-go trend. We've just set a lower low, and this could indeed look like turning out to be a lower high as well. Of importance is to take a look at the oscillator. We saw some heavy volume. You see the oscillator turning dark blue as price moved into this lower low. And now we see the momentum has risen to test the zero line from below. So if you've been watching us for, well, it seems like a long time now, but if you know the go-no-go charts, you know the importance of that zero line. It's an objective level that can be used as support in a go trend and resistance in a no-go trend. The theory behind that is that there shouldn't be any excessive buying or selling that's in contrast or contrary to the trend that you're in. So in this case, we're in a no-go trend. We expect the zero line, all else being equal, to hold as resistance and to reject the oscillator and for it to turn back negative. If it doesn't, breaks into positive territory, then, hey, there's something constructive happening here on the larger time frame chart. But right now, we're going to look at the zero line, and we're going to see if we roll back over into negative territory. You can see that if we close anywhere near where we are now, we're closing lower than we did last week, and we could be potentially putting in a lower high. So still a bearish no-go picture on the weekly chart. So then when we drill down to the daily, we have to take these these attempts to identify go trends in context. And you can see that really this year, it is the no-go trends that have been powerful. The no-go trends will be giving you these moves down as the go trends have really been sort of break even and haven't really amounted to much. So this is an important moment. There's no denying that. We're going to see what happens here. The oscillator broke into positive territory, which it shouldn't have done if this no-go trend was going to be healthy. It broke into positive territory. We saw some aqua bars. We're back in a no-go. We're back at zero. We just talked about how important that zero line is. We're going to watch that on the daily chart as well. If it finds support here, prices may set a higher low and rally. If we get back into this negative territory, then we could say the no-go is really then back in place with momentum on its side. So we'll see what happened. Obviously, the Fed kept the rate hike as people expected, but the language used informed the market that there would be no softening, at least in the foreseeable future. So that sort of hit the markets hard yesterday and into today. So what does that mean for our macro drivers? Let's have a look first at rates. We were looking at rates on Monday when the flight path went out pre-market, and we were noting that rates had corrected against the trend. We'd seen a counter trend correction arrow and then a weakening into aqua bars, and we were looking at the zero line, and we were saying that we needed to look at it because it was starting to ride the zero line. And we can see now that it's been at zero this entire week, and the grid of the go-no-go squeeze indicating reduced volatility has risen to its max. So this is an important moment for rates as well. We know that rates, high rates, rising rates work as a headwind to equities. So if this finds support here and breaks out of the squeeze back into positive territory, that will be telling us that momentum is back in the direction of the go trend, and we'll get a continuation icon, the green circle, and we'll probably attempt to break above those prior highs. So we are looking at the rates chart. Will we find support here? Will we break out of the squeeze into positive territory? What else are we looking at? Of course, we're looking at the dollar using the ETFs here, UUP. We saw a lot of sideways action, a lot of corrective consolidation over the last several weeks. And we noted how the oscillator was riding the zero line in a really extended squeeze. If you imagine this dip into positive territory hadn't happened, we would have seen a very long max squeeze here, which was broken to the downside. And of course, we saw that amber bar, that go fish bar, telling us that there was uncertainty in the trend. Right away, though, the very next bar, we're back into a go trend, and we're back testing zero from below. So this is a very, you can just get a feel that it's going to break one of two ways. You've got rates that are testing zero and looking for support, trying to break prior highs. The dollar's trying to regain and remain in its go trend as the zero line is tested by the oscillator. You've got equities trying to get into a go trend, but struggling and now testing zero on the oscillator as well. So these will resolve in one direction, and we know that just like rates, the dollar acts as a headwind for equities as well. So if the dollar is going to continue in this go trend, rates continue in their go trend, then the weight of the evidence would suggest, as we saw on the S&P, that we are back in a no-go, and that would be carrying the weight of the evidence on equities. Another chart that we like to look at, of course, is the dollar chart. This is the USO, the ETF of the US oil fund. And we can see that the oil is entering a go trend, having broken above zero, finding support, breaking out of a squeeze. Now we're seeing go trend continuation as we see stronger blue bars. Now there's lots of congestion here. You can see how much resistance there may be at these levels. So we're going to look to see if this trend can persist. But with momentum on its side and a continuation icon here, at least in the short term, we will expect the go trend to stay in place. We talked about that at the beginning, how commodities have entered a go trend in general, the US commodity index. Well, oil is doing its bit, making a higher low here and entering a go trend to push commodities higher. So let's go now to take a look at our sector RelMap. We've been noting now for several weeks how it's been the less growth sectors. I don't know if that's the best way to phrase this, but it's not the growth sectors that were driving the equity markets to rally off their lows. When we saw the Go trend on S&P the beginning of the week, and as of Friday, it was not these growth sectors doing that. You can see how technology, discretionary, and communications in strong no-go trends on a relative basis when that happened, still in no-go trends today. It's the middle of this map that's performing well on a relative basis. It's energy, it's financials, industrials, materials, staples, utilities. These are utilities actually, sorry, not utilities, but staples, healthcare, and the others are the ones that are relatively outperforming. So let's dive into a couple of these sectors. What I was pulling out this week in our flight path note that goes out at the beginning of the week pre-market was XLE and XLF. Let's take a look at XLE first. XLE, of course, the energy sector. And you can just see how far ahead of the S&P it was in terms of that go trend. You can see how we've broken to higher intermediate highs, and we're now testing the highs from June, those summer highs on the energy sector. You can see the oscillator well in positive territory, a string of uninterrupted go bars, and price testing prior highs. So that is a very different picture from what we saw on the S&P. So we looked at a security in there, MRO. We like to talk about MRO. We've mentioned it before on a weekly chart. We see that the MRO, Marathon Oil, it's a long-term trend. This is not a sprint. This is indeed, forgive the corny pun, a marathon. And you can see how this long-term go trend, while threatened here with amber bars and a big squeeze buildup, has resolved out of the squeeze into positive territory. And that's given us a trend continuation icon on MRO, and we're right back testing these prior highs. So you can see, if you were long MRO, you would be doing far better than you'd be sort of separating yourself from the benchmark index. And if we look at it on a daily basis, you can see how that looks. You can see that we've broken above zero. We're back in a go trend. And what a big day today. A big day today, up almost 6% on Marathon. So moving to new highs, getting close to the prior highs from June. So the energy sector looking fairly strong, even as the markets react to the news from the Fed. Let's take a look at XLF as well. XLF, the financial sector, which we saw was outperforming on a relative basis, is in a pure go trend as well. So broken out of this this pattern here, we saw so much support at these levels, stretching back to the summer, and you can see us breaking above the resistance levels here as well as it tried to make a new high above the highs from September. But you can see how we've fallen away yesterday and today, as has the rest of the market. But we are in go colored bars with the oscillator above zero, moving down to test it. So the security that we pulled out this week was Jefferies. And if we take a look at Jefferies, we can see what we were looking at here. If we throw quickly, perhaps I can throw a trend line on here to sort of show what I was looking at, was the break above this level. So right here, you can see how we were in a downward sloping trend line resistance, and we've broken above it. And then now actually these last couple of days have brought us back down to retest this level as the oscillator's above zero. So this is not a bearish picture yet. We're still, weight of the evidence says we've broken into a new go trend. We're above downward sloping resistance. We've broken above that neckline. Oscillator is in positive territory and is above zero. So this is also still in play for Jefferies in terms of looking for something to be positive about in the financial sector. So let's take a few minutes. That's sort of what we walked through in Flight Path pre-market. Let's take a look for a few minutes at some of the big names that were moving today and yesterday after the news hitting our channels. let's take a look first at AMD. AMD, lots of trading in AMD. You can see, actually, I put out a note this morning with this chart because it was very interesting to me. We are in a strong no-go on AMD, but you could see that perhaps this is starting to look like a basing pattern. You can also see some bullish divergence, lower lows in price, slightly higher lows in the oscillator. You can also see how this no-go trend is rallying back to test this horizontal level that was support and is now resistance. That's the concept of polarity in play here. You can see that this level may well prove to be some resistance for AMD. Now, in another slightly bearish move, you can see how when we were in the middle of this no-go drop, you can see how volume was heavy. That's the oscillator turning dark blue. When the oscillator turns from the aqua to the dark blue, that tells us that volume is heavier than usual. Towards the end of this chart, as we are rallying off the low, lighter volume. So perhaps some less conviction in this rally off the low. Having said that, we see a go-no-go squeeze. And this is what we put out this morning. The suggestion was to really watch closely and see in which direction the squeeze is broken. Given that we're in a no-go trend, we expect the zero line to act as resistance. So if this broke out of the squeeze back into negative territory, we could expect a new leg down in price and perhaps a test of these prior lows. Given that we're seeing a slight dip into positive territory, we're going to watch and see if this gives price the push it needs to get above this resistance, which would eventually lead to a trend change. So quite a lot happening here on AMD. Now, just to highlight, somebody was asking this morning, can we look at this on a 1-minute chart? Does it do the same thing? Can you read it? Can you analyze it in the same way? So I pulled up the 1-minute chart this morning, and this is not the, hold on, let me see. And here's where we were. We can see that there's a lot more choppiness in the 1-minute chart. It's a faster moving chart, but the concepts and the principles remain the same. You're looking for trend. You're looking to see if there's anything interesting happening at the zero line, and you're looking to see if there's confirmation with the continuation icons. Remember, those happen when trend when is confirmed by the momentum indicator staying on the right side of the trend. So all the while, the oscillator stays above zero while we're in a go trend. That's a positive sign. When we see a no-go trend in place, and then we break through to negative territory, that's telling us now that the momentum is in the direction now of the no-go trend. Okay, one other stock that we wanted to look at quickly. Let's look at Boeing, another one that's been talked about a lot this week. Very interesting because Boeing is performing admirably compared to what we're seeing around the rest of the markets. You can see that it's coming out of a no-go trend. Breaking above downward sloping resistance. We saw something similar when we were looking at the Jefferies chart. But look at the strength here on the right side. We're seeing a breakout of a go-no-go squeeze into positive territory. Then we're seeing a retest of that level on heavy volume, and we're seeing support at zero. And now we're seeing the color change, go trend strengthening today on a 5% move to a strong blue bar. So now we are in a strong go trend. Oscillators in positive territory on heavy volume. So a nice bullish looking chart for Boeing. Let's take a look to see if Boeing price can test the highs from earlier a couple of months ago, the end of August. So those are the charts we're looking at. If you have any questions, of course, as always, drop us a line at info@gonogocharts.com. But hopefully we will see you all next week. Tyler, I think we'll be back. If not, it'll be me again on my own. But have a great week, great weekend, and check out the YouTube channels for StockCharts, GoNoGo Charts, and of course the on-demand app as well. Thanks everybody for watching. Have a great weekend.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.